Hello there. I'm Ali Haji on Crux Investor, CEO and Director of Ion Energy. We trade on the TSX Venture under ticker Ion, Ion GF on OTCQB, and 5YB over in Frankfurt. We are an early stage lithium explorer and developer in Mongolia. We control 110,000 hectares of highly prospective brine licenses within the close proximity of the largest consumer on the planet, that being China.
Right, Ali, good to have you back on, and good to see you again. You've been sort of traveling the world at various conferences and the like. What's the main feedback to you?
I think the main feedback is, we've sort of been forgotten for the most part, and I think that's a result of not having the necessary skill set for brine exploration in Mongolia. Being first movers, of course, we have a bit of a gap that we're looking to fill, if you will. And so we've had less of a rally with respect to the other lithium players in the world, specifically in LATAM, that have the necessary skill set. But more and more, I think people are recognizing that we are vastly undervalued. We have a team that can execute. We've built a very strong team of technical experts alongside strategic experts that will allow us to further de-risk and better understand our assets. So being a fully funded company, I think that's important to note. We're not out here looking for equity. We have enough to keep us going for the next 18 to 24 months. We are just getting started with respect to access to country.
Okay, so what do you do about it in an environment like this, right? It's pretty tough out there. It's been brutal in all markets. Natural resource not immune to that either. Share charts all look the same. It's been downward pressure all the way. You put out a press release recently. Good grades, right? Collected like from a pool over there. But you put that out into a market that just goes, I don't care. So what do you do? How are you spending your time?
Yeah, it's been tough. You could put out fantastic news. I could put out a resource tomorrow that says that we have 20 million ton plus LCE equivalent. And the market will be very soft to react. The sort of economic factors that are affecting the vast majority of companies as well as investor sentiment around the world continue to be a bit of an issue, to say the least. But as far as the fundamentals of the company are concerned, being funded, I think we're in a stage now where folks are a bit reluctant to invest. People have liquidity issues. They're seeing a bit of inflation. But as a company that is funded, that is able to put out results, as you mentioned, 918 milligrams per liter on surface, that is significant. You look at companies like Lithium Americas, Neo Lithium, and a number of others that collected those Coke bottle samples on surface. They're in and around that range. So we're at a market cap of sub 20 million Canadian today. Lithium America is about $5 billion. Neo Lithium sold for $960 million to Zijin. These are numbers that don't quite show the true image or reflect accurately what we are seeing on surface. So it is tough going. It is not always pleasant when you put out good news and the market doesn't quite react. But importantly, I think you put your head down and you realize that you've built a team around you that is quite significant. But beyond that, you are funded. And so you're not at the mercy of the market with respect to any capital raise, and you just continue to execute. So that's where we are today. It's been, as you said, a lot of travel, a lot of storytelling, but that's important. I think it's important for people to understand where the value proposition is and how we compare to our peers.
Okay, well, talk to me about this, okay? You've said you're funded several times. In the past few minutes, right? You're funded. I want to know, you're funded to do what? What exactly will you be doing, which will allow you to go and tell that story at these various conferences that you've been attending so far and will continue to attend this year? Because they need data, they need information to be able to say, hey, maybe you're like Lithium Americas. Yes, I got that right. I think. Maybe you could be the next Core Lithium. Maybe you could be the next Sigma Lithium. You've got a given reason to believe. So, what are you doing with this fully funded budget of yours?
Fantastic question, Matthew. And we have drilled in excess of 300 holes on both our assets. So we've drilled on Baavhai Uul, we drilled 300 holes across an 81,000 hectare license. That is important to note because 81,000 hectares is about 5 times the size of Vancouver. Obviously, when we did that drilling program, we didn't have the necessary skill set in country to help expand our assets, but we had an opportunity to scratch the surface. On Urgakh Naran, we put in 72 holes. We've done 88 line kilometers of geophysics and TEM. What that allows us to determine is where the monitoring wells go in. So the monitoring wells will allow you to measure your flow rates. They will allow you to measure your average grade. And ultimately, based on the rudimentary calculations that would be average grade versus volume, you have an early resource indication. We've seen time and time again that companies around the world have gone out there with early resource indications and their valuations have just popped, to say the least. So for us, we have enough capital today to ensure that we have an early resource indication on Urgakh Naran by the end of this year. On Baavhai Uul, we have an opportunity to ensure that we are targeting where the anomalies are the highest in order to determine an early resource indication there as well. So to answer your question, Matthew, I think with respect to the capital that we have today, we are well funded to allow us to not only allow the company to get to an early resource indication on Urgakh Naran, but expand and better understand Baavhai Uul. But as you start to see the equity price increase as a result of these results, and the market is nobody's sort of nobody can quite control where that goes. But if we do start to accelerate based on our results and our equity price does increase, there are warrants that would convert that further capitalize the company. So those warrants are priced at 40 cents. Those expire in August of this year. Those are bringing in about $3.6 million. We have 70-cent warrants that expire in 2024 that would bring in an additional $8.5 million. So you're looking at about $11.5 million run rate across the company in terms of what we could potentially raise if we were to convert those warrants. Beyond that, we continue to look at strategics as being partners of ours to allow us to better understand not only the assets, but the potential extraction methodologies or technologies that would be used to bring these assets to production. So I think we're in a healthy state at this time. The markets, once again, are nobody's guess.
Well, no, it's tough markets for sure, but that's why it's really important that you stay in control of what you can stay in control of, right? So I want to come back to something you said there. So, we've got this, large land packages and we've done lots and lots of drilling, right? I kind of, in a very meaningful way, I'm less interested in the size of the land package and more interested in the data that comes out, the results that come out of that, which inform me and say, right, okay, where we have drilled, we've got these sorts of results. They look quite good, and I think we can go and replicate these elsewhere, right? So that okay, good. I like that. But you haven't got much money today to do anything kind of aggressive, and maybe in this environment you don't want to do that. Maybe it's a little bit of hunker down and have conversations which interest investors or strategics. And I'm interested in what the nature of those conversations are, because you have talked in the past about maybe looking at listing on AIM. You've got the option of talking to strategics in country and I suspect out of country. Lithium's very, very popular. I've named a few companies there who've done exceedingly well, but you've got to go through a process here and excite people. And the first thing that you said to me in terms of the feedback was, hey, don't have the skill sets in Mongolia to do this. So we're not so sure Mongolia is a place we want to invest, I think broadly, right? So how do you get over that?
So I will answer all those questions, Matthew. And I think what you've said is with respect to the skill set. I have an obligation to my shareholders. We raised capital in February of last year that funded the company quite significantly. I did not ensure that we went out, or I did not even promote the fact that we would potentially be doing a full-scale sort of exploration program until we had access to country. In February of this year, Don Haynes, who is an individual that is very well known in the lithium space, Dr. Mark King, who is the qualified person at NEO, as I mentioned, when it was sold to Zijin, Him and I and Don worked with our team in country to define an exploration program that we could conduct in country that would be validated or to the standards that you would expect for a lithium company anywhere else in the world. So in February, we started those conversations. We went out to site. We drilled a number of holes on Urgakh Naran, as I've mentioned, and those were done to hydrogeological sampling methodologies. And what that means is you drill the hole, you hit the water table, you drill 2 more meters. You drill a hole, you hit basement, you stop. When you do hit the water table, you're bailing out those holes, waiting 24 hours for them to refill, and then collecting the brine samples for assaying. So very, very sort of, calculated and strategic, or even, industry recognized sampling and assaying methods on Urgakh Naran, I beg your pardon. And with respect to the skill set in country, we've now been able to train them. And having gone there and seeing the skill set that is in country, including the likes of Water Management LLC, which is run by Togos Sainbayar. Togos has worked on a number of different projects from a hydrogeological sampling perspective, including Rio Tinto. So they've worked for world-class companies in Mongolia. They understand a number of the hydrogeological sampling methodologies. But of course, brine has been something that Mongolia has never gone out there and looked for. But having looked at where Mongolia lies in the Great Asian Endoheric Basin, having looked at the assets that we see in terms of the fault lines and the volcanic rock in the region, and those contained basins, it's indicative of what you would find in Argentina, Chile, and Bolivia. And so we're replicating the work that has been done on that side of the world in Mongolia today. As far as strategics are involved, we are working with a number of strategics, not only Asian, but also European and LATAM centric. So there is a fair bit of interest there. We've seen the likes of major LATAM companies, which will not be named, visit Mongolia to look for either lithium or copper. Now, in terms of those strategic relationships, what we hope to achieve there is, we've been unequivocal from day one. Ion Energy is not a company that will bring lithium assets to production. It's a company that will look to partner with strategics. Our proximity to those strategics that are producing the lithium carbonate equivalent or otherwise for the battery market in Asia, which is larger than anywhere else in the world, we do have NDAs in place, and we will be sharing our data with them. We will ensure that we bring at least one, if not 2 of them, as part of our shareholder base in due course.
Right. So I need to, like I say, I want to get into what that conversation was like. You said to me, I didn't say it, you said it. They think you don't have the skill sets, whether it be by country or by region, you're not able to get the skill sets you want. You're arguing the case, well, actually, we do. There's lots of places and case studies that we can learn from, and we do. So the conversations that you've had on your travels, do you think that those investors are now set straight? Do you think that, are you viewed differently? And what have they done about it? You've seen a little pop in your price recently. So
yeah, a little pop. Yeah, exactly. So they do recognize now that we've brought on, people that understand the industry, that have had a number of successes in terms of exits and otherwise. And so that's a thing that the market is now recognizing, I would say. They know that we've built a team that consists of individuals that have built significant organizations, but also put together resources and ultimately exited. And so the market today has been soft, as we've said. So in terms of that skill set, which you continue to bring up, which I continue to bring up as well, that skill set is one that was lacking in that region. But now we're in this position where we have the necessary skill set. And I think it's important for our viewers to note that as a group of companies, we've had a producing asset come online in Mongolia in the gold space. We've had an exit in the coal space. We're now currently looking at copper in the region as well. Rio Tinto has just doubled down on their investment, close to $5 billion going back into Mongolia in terms of the Oyu Tolgoi mine. You also have the likes of Zijin, a Chinese company that, historically the Chinese were I wouldn't say reluctant, but there was a bit of friction with respect to how they would invest in country. And so you're seeing Zijin now put $26 million into Xanadu Mines, which is a copper explorer there. So the economy truly is opening up. And here at PDAC, which is being hosted in about 2 days' time in Toronto, we're hosting the Mongolian delegation. We've seen the vast majority of government now come in as the younger guard, if you will. The old guard is now exited. a lot of capitalistic mindsets, a lot of folks that see Mongolia as an opportunity that would allow the GDP and ultimately the country to progress. So the skill set is coming in. We're seeing more and more strategics come in. We're seeing a lot of cooperation from the government, and I think we're at a stage now where Mongolia truly has an opportunity to shine.
Okay, and I'm a buyer of Mongolia. Okay, we've had lots of conversations about Mongolia. Let's go back to the company. Obviously, tricky times. You had a little pop recently. Tricky times ahead. You talked fully funded to kind of do what you need to do in this environment. You may get some money through from warrants. 40-cent warrants, 36 today. It's pretty close. So let's say that happens. Do you need to go and list on AIM?
So the AIM listing is being contemplated for a number of reasons. One, primarily, if you look at the company cap table today, we're held 25% management and insiders. We will never sell, assign, or transfer our shares. We continue to be buyers on market. So if you look at the SETI reports, we continue to buy on market. The rest of the holders are family offices. They are a number of institutional funds, including US Global. You have Delbrook. You have Maxit Capital. So a number of funds that are sticky long money that believe in our story. And as a result of that, you have a number of shares that are held in essentially what would be deemed non-liquid type holdings. And so liquidity for us as a company has been lacking. With respect to what we did with the bought deal last year, we announced $3 million. We took 5.75. We had demand for 10. We didn't want to overly dilute, but we wanted to ensure that we're bringing in the right players. Not one of those funds or institutions has looked to sell. They continue to believe in the story, but the liquidity from a retail perspective is where we lack. And so the AIM listing is being contemplated in order to bring in some retail money that allows us to, one, settle in Canada, dual list in the UK, but build some liquidity into our share price. And if you look at the AIM exchange today, I think there are a number of organizations. So a number is probably a very gracious word, but there's a couple of lithium organizations that are trading there that have had massive success and upside in terms of what they've been able to accomplish with respect to their assets. And I think for us, it's one worth contemplating. It's one that we are considering, but we have to ensure that we're doing what's best for our shareholders. It has to be done at a premium to the last raise. And obviously costs have to be kept quite low. Our goal is to put the capital that the company raises into the ground. It's not for regulatory issues or anything else of that nature.
Well, it's an important point you raised there, because the cost of listing in London is somewhere between £500,000 and £750,000, right? And the ongoing costs, right? You've got ongoing costs that, for a company of your size, that's quite a meaningful commitment. And I guess you'd have expectations, or at least want some sort of certainty about what the UK market could do for you. How do you get comfortable with that? What do the conversations need to look like? What would you need to see happening to say, well, do you know what? That might be the best option for us.
Well, I was in London in November for a bit, and then into December, and then I was back there about a month ago before mining in Daba, and we've had conversations with the brokers. We've talked to the various analysts that would potentially put in 80% of that retail money. We're working with some institutions there that would be deemed, they could provide coverage for the company, which is important. If a bank were to cover us, I think they have a target price. That's obviously important. Currently, we have paid research. So we've had those conversations. I think in terms of the pricing that has been committed to, it is at a premium to our last raise, which is quite encouraging. But again, it's very much a discovery exercise at this time. It's one that I'm having conversations with folks that have contemplated it or actually concluded an AIM listing. And as of last week, I had some very good conversations with an individual that was part of a lithium company that very recently exited, which I will not name again. But his advice to me was, if you're going to do it, make sure you bring in a big sum. Now, the flip side of that is you are diluting existing shareholders. Yes, it's at a premium, and yes, it supports your sort of value proposition, but also your firepower with respect to what you can do from an exploration and de-risking perspective. But these are things that we are contemplating. So I'm not going to commit yay or nay at this time, Matthew, but I will tell you that it's something that we are contemplating.
Okay, no, that's fair enough. I think people are very reluctant to kind of commit to anything at the moment, whether it be raising money, listing, economic studies, until they see what this market's going to do. I mean, to that end, right? Are you with the team in country operationally? They are tasked with doing what? What do they need to give you to help you with these conversations?
The team in country in Mongolia or the UK?
Yeah, Mongolia.
So the folks in Mongolia, what they're tasked with is a number of things. One, ensuring that we have the right individuals to do the hydrogeological sampling, which is a very sort of new protocol, if you will, with respect to brine, because they've never actually done that. But we have now trained them on the back of our site visit. And so that's important. But between Enki, who's a director of ours, Engtushin Kishik and Mark King, as well as Don Haynes, over the last visit, I think we've looked at Mongolia as a nation. We've looked at the potential for additional consolidation with respect to assets in country, and we continue to evaluate those. We've spent a fair bit of time looking at the specific geology across the country as well. But I think being first movers in the lithium space for us, having founded the company in 2017, having listed in 2020, our first asset was granted in 2019, our second asset was granted in 2021. With respect to the government and their support, we've also seen that they have been quite forward with respect to supporting what we're doing. We've also seen that we are now hosting them here at PDAC in about a few days' time as well. So we are first movers. That gives us an advantage over a number of other organizations. So our goal in Mongolia today, given the skill set that we've built, the team that we've built, and the relationship that we have with government, is to continue to look for results on our assets, which obviously we've done a fair bit of due diligence on before we sort of acquired them on the lithium front. But also beyond that, continue to look for other opportunities in country where we have an ability to add to our hectarage as well as our resource, our potential resource.
So we've seen, I've mentioned, I think Core Lithium, Sigma Lithium, obviously Albemarle, SKM, all the big guys are cracking on. They're moving ahead. They've got the money that they need to kind of get into production. Are you at all nervous as an explorer or want to be developer of what the market is going to look like going forward? We've seen supply demand fundamentals, massive gap delta between demand and supply on every single PowerPoint when companies come and talk to us. But how do you engineer and insert yourself into that ecosystem from where you are today? Do you have to get the strategy right today as to who you partner with? Is a signature with a strategic partner actually more important than perhaps one realizes today, if that's your funding routes, because it will define you, won't it?
Yeah, you're absolutely right, and I think what's important to note on that basis is the fact that you have the likes of refiners that have sort of DLE operations, which I think you and I chatted about before we hopped on here. But there's also the evaporation pond perspective. There are battery manufacturers. There are vehicle manufacturers. There are storage manufacturers. There's a whole sort of gamut with respect to the ultimate supply chain. So you're either going in with concentrate, or you're going in with somebody that refines, or you're going in with somebody that manufactures those batteries. And from a macro perspective, Matthew, I'll touch on this very quickly. The supply perspective is quite limited. So the prices have run up to 75, 76, 80,000 per ton. This is not sustainable in our view. At these prices, the equivalent of a Mini Cooper that would be electric would cost upwards of 100,000 US. No matter how much money is being printed by the governments, you cannot subsidize or incentivize that, let alone the inflation that's going on in the world today. So the prices do have to come down, and it's our belief that they would be in and around the $16,000 to $24,000 mark per ton, as opposed to what we're seeing today. With respect to the strategics we're working on, and you're absolutely right, we see this as an opportunity to partner with the right strategics in the right region. The Albemarles of the world, and including the Teslas now looking at acquiring mining licenses and ultimately being miners, tells you that there is a supply glut that needs to be filled. Albemarle is pressing on. Companies like Zijin, who have never been in the lithium space, are now acquiring companies like Neolithium and what have you. So the space is changing. The space is one that is quite dynamic in nature. I think as far as we're concerned with respect to our proximity to market, given China does consume the vast majority of the lithium on the planet, our goal, as you've rightly pointed out, is we will continue to explore. We will continue to arrive at early resource indication, and at which point we will look to a partner in any sort of level of that supply chain that will ultimately work with us to bring these assets into production. So ION is very much early days today, but as far as the strategics, we have a mixed bag of strategics that we have an NDA with today, and we hope to be able to announce something in short order.